Okay. So good afternoon, students. How are you all doing? Brilliant, I hope. Okay. Good afternoon, Good afternoon, Avni, Divya, Priti, Anuj, Vaishnavi. All right. Okay. So friends, I hope every one of you attending the class today has, completed the first class, has seen the first class, has made the notes from the first class, has revised the notes, because this is what we got to do if we want to do well in economics, right? So, sir, what is our agenda for today? What are we studying today? So, friends, here I bring before you our today's journey. Okay. First of all, I'll be telling you who maintains national income in our country, who estimates or who maintains national income in our country, who maintains NI or calculates NI in our country. That would be the first agenda for the day. Very short discussion. Followed by this, we will understand briefly. Followed by this, we will understand briefly what is circular flow of national income. What is circular flow? A very brief understanding we will take. And gradually, we will move on to the much lengthier discussion that would be on different ways to measure national income or different tools to measure national income. How do you calculate national income? What is the method used? Measurement of national income. So somehow this is our agenda for today. Okay. So any question you ask, please, before I start, I'll give a disclaimer. Any question you want to ask, you are more than welcome. But my request would be to ask from the topic, from the discussion area that is going on. So, for example, if I'm teaching you, suppose, circular flow, and then suddenly you ask for a measurement of national income, then it would create confusion for you as well as for others. So while we are on the topic, ask questions pertinent to that topic only. Okay. And I'll answer all the questions. Today also the class will proceed the same way. Around till 3 o'clock I'll teach. Then for 5 to 10 minutes, I will be taking continuous doubts. Okay. And then back to teaching again. Okay. So I hope everything is clear. All right. Let's go. Let's go. All right. Great, 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 great. So let's start, everyone. First question. The first question of the day, the first learning of the day rather, is who compiles statistics related to national income? Who is responsible for national income in India? Who is responsible for national income estimates in India? Who is responsible for, this can be an MCQ question, who is responsible for national income estimates in our country, India? In our country, India. Who is responsible for national income estimates in our country, India? So, dear students, I would like to divide the answer in two parts. I would like to divide the answer in two parts. The first part is Central Statistics Organization. For the whole country, if we talk about, it is Central Statistics Organization, CSO, as you would call it. Okay. CSO, Central Statistics Organization, Central Statistics Organization, Central Statistics Organization, Central Statistics Organization, in the Ministry of Statistics and Program Implementation. In the Ministry of, everyone, in the Ministry of Statistics and Program Implementation. In the Ministry of Statistics and Program Implementation. In the Ministry of Statistics and Program Implementation. In short form, it is also called MOSP&I. Okay. This is at the center level. At the center level. But as you know, states have also been given the responsibility. States have also been given at the responsibility. So this is center level. If you ask me friends, about state level, then my answer would be at the state level, the same work has been assigned to State Directorate of Economics and Statistics, to the State Directorate of Economics and Statistics, State Directorate of Economics and Statistics, State Directorate of Economics and Statistics. So I would request each one of you to note this down. This too is only important as far as this discussion is concerned. So I repeat, if they ask you who is responsible for national income estimates in India, then there are two bodies at doing their own tasks. So at the state level, it is State Directorate of Economics and Statistics. Okay. And at the level of national or the country level, you would say Central Statistics Organization that falls under the Ministry of Statistics and Program Implementation. I hope it's clear, everyone. It is clear, everyone. Come on, everybody, confirm. It's straight away learning thing. So I hope it's clear. And yes, of course, we will also practice the institute MCQs. We will also practice the institute MCQs, but that would be only on the last day of the topic. Today is not the last day of national income. Okay. So the day when we have the last day of national income, because by that time I would have explained you all the concepts, then we would solve the institute MCQs. Okay. So relax about that. Meanwhile, I will create my own MCQs and practice with you. Okay. All right. So in Hindi, if I say, क्वेश्चन ये था कि हमारी कंट्री में नेशनल इनकम एस्टिमेट्स बनाता कौन है, डेटा कंपाइल कौन करता है. तो यहां दो बातें होती है कुल मिला के. अगर स्टेट लेवल की बात करें तो स्टेट डायरेक्टोरेट ऑफ इकोनॉमिक्स एंड स्टैटिस्टिक्स ये काम करता है, और अगर सेंटर लेवल पर आप बात करोगे तो सेंट्रल स्टैटिस्टिक्स ऑर्गेनाइजेशन, जो कि मिनिस्ट्री ऑफ स्टैटिस्टिक्स एंड प्रोग्राम इंप्लीमेंटेशन के अंतर्गत आता है, वो ये काम करता है. उम्मीद है क्लियर है सभी को. E and S is economics and statistics. E is economics, S is statistics. E is economics, S is statistics. Hopefully it's clear, everyone. All right, great, everyone. So friends, as I had told, my first agenda for the day is done. Who maintains NI in our country? We have done that. We have done CSO and State Directorate of Economics and Statistics. Okay, great. Now, coming on to slightly longer topic than this one. The third topic is actually the longest. Okay, this is not that long. Circular flow of national income, I would say. Circular flow of income, you could say, or circular flow of national income, you could say. You know, it's like a cycle. If you want to know the definition, then I will break the definition into 2-3 points and then explain it to you. Okay, first of all, it's like a cycle of income. It's like a continuous cycle. It's like a continuous cycle. Sir, but cycle of what? Sir, it's like a continuous cycle. Arey, but sir, cycle of what? Three major things. Continuous cycle of three major things. Production, distribution, and consumption. Bas. Production, distribution, and consumption. So, sir, what is it exactly? Can you tell us? Yes, sir. So please remember that circular flow of income, everyone, circular flow of income in our country, circular flow of income in our country has three phases. Circular flow of income in our country has three phases. Okay, sir. Now I'll talk to you about each phase. First phase is, and also I will explain it in Hindi. So please listen carefully. See, in the first step, income, please answer me this. I had explained this in the last class. So give me the answer. When can I or anyone else earn income? Just answer me this. I had given the answer in the last class. If I translate it in Hindi, मैं ये पूछ रहा हूं कि कोई भी इंसान इनकम कब कमा सकता है, ये बताइए मुझे आप. Very good. Very good. People are answering that when you sell goods and services, sir. People are answering that when you sell goods and services, sir. Exactly my point. Perfect. When we sell goods and services. When we sell goods and services. Exactly. When we sell goods and services, When we sell goods and services. Exactly. So, come on, everyone, pay attention. When we sell goods and services, but in order for us to sell goods and services, we got to first of all produce them. Exactly. So, the first step is production of goods and services because only then one can make income. So, the first phase is called the production phase of circular flow. Production phase of circular flow. Production means production of course, goods, and production means, of course, of services. Sir, it is clear, absolutely clear. Sir, what is the second phase, sir? Everyone, once you have taken down this production, once you have undergone this production process, now listen carefully. For production to take place, in microeconomics, you have studied what do you need. In microeco, you must have studied for production to take place, what do you need? Come on. Absolutely. For production to take place, you need factors of production because without factors, you cannot produce. This you have done in microeconomics section of the syllabus. Okay. In the earlier classes, I mean, where you got to have learned there are four factors of production: capital, entrepreneur, land, labor, capital, entrepreneur, land, labor, capital, entrepreneur, land, labor, capital, entrepreneur, land, labor. So, whoever helped you in this production phase, that is step one, you got to give them some income. You got to give them some income. Otherwise, how will this earn their living? That is called distribution phase. Distribution phase, where we distribute income among the people. What kind of income? We give rent to the landowners, to the labor we give wages, to the entrepreneur we give profit, on capital we pay interest. So this is the income distribution phase. Distribution phase or income distribution phase. Distribution phase or income distribution phase. That is why it is also called income phase. Okay. Now you all tell me, once somebody has made income, you all tell me, once somebody has made income, once somebody has made income, you all will tell me, what do they do with this income? What do they do with this income? Come on, everybody, answer me this. Income अगर कोई कर लिया, आप income कैसे कहिए? पहला बात तो आपने सेकंड फेज में किया क्या? आपने जो गुड्स बनाया, जिन्होंने आपका गुड्स बनाने में मदद किया, आपने उनका इनकम दिया उनके हाथ में। ठीक है। अब मेरा सवाल ये है कि इस इनकम का लोग करते क्या है? व्हाट डू द पीपल डू विद दिस इनकम? राइट। So with the income, people spend it on consumption. People purchase something, people consume something. So friends, that is called the expenditure. Friends, that is called the expenditure or consumption phase. I repeat, that is called the expenditure or consumption phase. So friends, to sum it up, the entire picture, to sum it up, I could say that the game begins with production, then you move on to income distribution, then people spend it on consumption, income is used on consumption, and hence production starts again, and the cycle goes on and on. This is the very basic model of, we would say, circular flow. We would say circular flow. Hopefully everybody is clear with this, yes or no so far. Come on, everybody. Very, very good. So if it is clear, guys, please note this down. Please note this down, or if you want to take screenshot, do that. Whatever is more convenient, I would suggest you note it down. Correct. Anusha, correct. Hitesh, correct. Sakshi, correct. Abhishek, correct. Very good. Vivek, correct. Lisa, correct. Fantastic. So this is what circular flow is. Friends, this is what circular flow is. Everybody, please remember, this is what circular flow is. Now, everyone, when we talk about circular flow, this is the concept that we have understood, circular flow. All right. Acha, remember, circular flow, we have spoken about it right now. Another part in your book, you will find circular flow when we will study Keynesian economics. That is after national income portion is over. Since we are moving as per ICAI material, so in the ICAI material, the depth of circular flow is written in the Keynesian economics part. So when I go ahead with the Keynesian economics part, then I'll talk about the rest of the details about circular flow. As far as this current national income chapter is concerned, this will suffice. I hope clear, everybody. Correct, everybody. Yes. Now, friends, there is a concept. Now, friends, there is a concept. I will be explaining that concept to you all. Now, friends, there is a concept. I will be explaining that concept to you all. Sir, what is the concept exactly about? Friends, there is another concept which we call as base price, market price. You all remember I had taught you about factor cost or factory price of commodities. Remember? Factory cost or factor cost, whatever you want to call it. Let's call it factor cost for the time being. Okay. And I had taught you something about market price. I am sure about it. Factor price versus market price. I had taught you all about this. Is that correct, guys? But now I move on to the another concept of price, which is called base price, which is called base or rather basic price. So now our discussion has gotten deeper. Now we are going to talk about three prices and we will learn how to compute one from the another. We will talk about basic price. We will talk about factor price, and then we will talk about market price. Once you all are ready, there are three concepts now that I will explain. Factor and market I have already done in the last class, but I will revise that. And basic, I didn't even use the word in the last class. So today you will understand this. Hopefully everyone is ready. Come on, yaar. Great. So everyone now pay attention. Everyone now pay attention and listen to what is going on. Okay, listen to what is going on right away now. There are three words that you have used: basic price, factory price, a factor price or factory price, it's all right, a market price. Before I am able to do that, before I am able to explain this, before I am able to explain these three concepts, please pay attention. Okay, so I'm using three words now. Okay, I'll be using three words now, everyone. Just a second, just a moment, everyone. Yes. So friends, I'll be using three words right now. Number one is basic price. Number two is factor price. And number three is market price. Number one is basic price. Number two is factor price. And number three is market price. So in national income, we are trying to understand three concepts. Sir, हिंदी में बोलिए. हम लोग अभी तीन चीज पढ़ने वाले हैं. बेसिक प्राइस दिख रहा है, फैक्टर प्राइस दिख रहा है, मार्केट प्राइस दिख रहा है. हम लोग इन तीनों के बारे में अभी बात करने वाले हैं. तो प्लीज लिसन केयरफुली, कायदे से सुनिए बात को. इधर देखिए आप लोग, है ना, इधर पे ध्यान दीजिए, बात को सुनिए. एवरीवन देखिए सर, दो तरीके का टैक्स होता है, वैसे ही दो तरीके का सब्सिडी होता है. दो तरीके का टैक्स होता है, वैसे ही दो तरीके का सब्सिडी होता है. सर मतलब there are two types of taxes. I am talking about indirect taxes. Here we are talking about indirect taxes. What is indirect tax? The one that is imposed on goods and services. What is indirect tax? The one that is imposed on goods and services. So what is indirect tax? So the one that is imposed on goods and services. So as I mentioned, that indirect taxes are comprising of two different components. Okay. On the one side, you have the component of indirect tax, which is called production tax. Similarly, I will discuss for subsidies as well. But when first let's discuss this. One is production tax and one is product tax. सर दोनों अलग अलग होते हैं क्या? सर आर द टू डिफरेंट? डेफिनेटली यस. प्लीज लिसन केयरफुली. A production tax is the one. Hello everybody. Production tax is the one. Hello everyone. Production tax is the one that is imposed on manufacture of goods and services. So if I have a factory and in that factory I am manufacturing a product, government is going to take some tax from me. Why? Because I have manufactured a product. Example, excise duty. Example, excise duty. Example, excise duty. So excise duty is an indirect tax, which is a production tax. Excise duty is an indirect tax, which is a production tax. Okay. Excise duty is a tax, which is a production tax. But now, everyone, here it is production tax, excise duty. But wait, then there is something called product tax that is not imposed on the manufacture of the product per se. Production tax is imposed on manufacture, but product tax is generally imposed on the sale of goods and services. Example, GST. Example, GST. So, sir, what is common to both? Sir, what is common to both? Friends, the thing that is common to both is that both are indirect taxes. But what is the difference between the two? Production tax is imposed when you are manufacturing a new good or a service, while the other hand, product tax is imposed when you are selling a good or a service. So suppose I am manufacturing this pen. Government is going to charge me excise duty for it. But when I sell this pen, government is going to charge me GST on the same. So GST becomes a product tax while excise duty becomes production tax. So you could say product tax is generally charged on sale of goods and services, product tax, and production tax is generally charged on manufacture of goods and services. Sir, in Hindi, please Hindi में बोलिए. Okay. इनडायरेक्ट टैक्सेस दो तरीके का होता है. एक जो आप गुड्स के प्रोडक्शन पर लगाते हो, यानी कि गुड्स मैन्युफैक्चर कर रहे हो इसलिए लग रहा है, वैसा टैक्स हम लोग प्रोडक्शन टैक्स कहते हैं. एग्जांपल एक्साइज ड्यूटी है. बट वो टैक्स जो आप सामान के बिकने पर लगाते हो उससे हम प्रोडक्ट टैक्स कहते हैं. एग्जांपल जीएसटी. एग्जांपल जीएसटी. दैट इज प्रोडक्ट टैक्स. एवरीवन, friends, I hope it's clear till here. Everyone, is it clear? Come on, yaar. Excise duty is a tax charged on manufacture. Whenever you manufacture a good in your factory, it is charged. That is excise duty. Is it clear? Similarly, friends, now subsidies are also of two types. Subsidy is like a negative tax. Subsidy is like a negative tax. In tax, we are paying some amount to the government. When it comes to subsidy, the government is paying some amount to us. Us means the manufacturers. Us means the sellers. Us means the manufacturers. Us means the sellers. Okay, sir. Is this clear? Yes, sir, it is clear. So I repeat, when we talk about indirect tax, it is composed of either production tax or product tax. Production is excise duty. Product is GST. It is clear, sir. Now, if I talk to you about, everyone, subsidies, you see, if I talk to you about subsidies, then again there are two types of subsidies taking place. Again, there are two types of subsidies. Subsidy is a benefit we receive from the government. Tax is the cost that we pay to the government. Subsidy is a benefit we receive from the government. Again, there are, just like there are two kinds of, taxes, production and product. Similarly, subsidies is also of two kinds, which is production subsidy, and the other one is product subsidy, Okay. So suppose I am manufacturing the product. Hello. Suppose I am manufacturing the product in some remote village which needs development. Government becomes happy. So instead of imposing tax on me, government finances some portion of my cost. That is production subsidy. And product subsidy is when suppose the product is a necessity, like some, You could say rice or wheat. Rice or wheat. These are necessities. Suppose it is 50 rupees a kg. But for some poor people, government grants 20 rupees as subsidy. So they have to pay only 30 rupees. That is product subsidy. Sir, this much is clear to us. Now you tell us, sir, now you tell us, how do you arrive at basic price? How do we arrive at basic price? So see, first of all of us know what is factor cost or factory cost. Factor cost is basically cost of all the factors of production. Means rent, interest, profits, rent, interest, profit. Similarly, wages, rent, interest, profit, wages. After we have paid all this, the cost of manufacture is factor cost. The cost of manufacture is factor cost. Once you have incurred factor cost, now, since you have manufactured a product, the government is going to impose production tax, not product, because product is charged on sales. Government is going to impose production tax. Right, sir? Government is going to impose production tax. So everybody, what we do is we add up production tax to it. But wait, for some cases, government will also give subsidy. So you will deduct production subsidy. So friends, you will deduct production subsidy. Yes, sir, you are correct about this. Yes, sir, you are correct about this. Exactly. Bus. Amount that you get is not the market price now, is the basic price, is the basic price, is the basic price. You can say that the product has now finally come out of the factory. You could now say that the product has finally come out of the factory. You could now say that the product has finally come out of the factory. So yes, factory cost, yeah, factor cost plus production tax minus production subsidy is basic price. Come on, everybody. Is that clear, everyone? Yes or no? Custom duty is charged on sales. So it is also a product subsidy. Custom duty, etc. is also on sales. So it is a product subsidy. So let's not talk about that now. Very good. Now, friends, now the picture starts with basic price. The fact that I have arrived at basic price, the fact that we have arrived at basic price, the fact that we have arrived at basic price. Now, we want to arrive where? Towards market price. That is the price at which the product will be sold. So you remember that there is a GST imposed on the food bill that you go and see in the restaurant. That is what we are talking about. So here we add product tax now. See, I haven't used the word production. I have used the word product. So see, we have added product tax and we have deducted product subsidy from here. We have deducted product subsidy from here and you get market price. So the difference that some of you were asking online was that factor cost and basic price, how they are different. So friends, what I told you all is that factor cost plus production tax minus production subsidy is basic price. But to this basic price, if you add product tax and production subsidy you deduct, then you get market price. And guess what? If somebody asks you to go from, sir, if somebody asks us to go from, let's say, if somebody asks us to go from factory price to market price, okay, then what we do? Come on. These two are both indirect taxes, yes or no? These two are both indirect taxes, yes or no? Then what we do is we add both of them. So we call it indirect tax. And these two are subsidy, yes or no? So we call them subsidy in a general. So we call them subsidy in a general. So we call them subsidy in general. So ultimately, friends, what does it become? It becomes something like factory price or factory cost plus indirect tax minus subsidy is what? Net indirect tax. Indirect tax minus subsidy is what? Net indirect tax. And eventually you arrive at market price. Eventually, friends, you arrive at market price. This is what you got to note down, everyone. This 4 points you got to note down, and this clarifies all the meanings. Is this clear, everyone? Clear hai kya? And only this much knowledge is required. Yes, Divya, it can be said so. But Divya, just note this much down, na? No other extra information needed. NIT is net indirect taxes. NIT, in case somebody gets confused, I would write it down for you. It is net indirect taxes, which is nothing but indirect taxes, total indirect taxes minus total subsidy. Be it production tax or product tax, or be it production subsidy or product subsidy. That is net indirect tax. Friends, I hope it's clear. Come on, everybody. Friends, this three noted down. If written down, write down in the chat box. Done, done. Come on, everyone. 3 points. If done, then write down in the chat. Yes, sir, we got that. Sir, we got that. Sir, we understood this much. We have understood this much. Great, 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 great. So everybody, let's move on now. Everybody, let's move on now. This is all about factory price and the entire thing. Great. Now we come towards the most important element of the discussion, which I would request everybody to listen patiently, because I will have to speed this up, right? Because see, the coverage that I do depends on the number of classes we can afford to give to a topic, right? Please listen, everyone. The depth of coverage depends on the number of classes that we are allowed for a topic. So friends, we cannot afford to waste much of the time. Now we are discussing how to measure national income. The biggest and the lengthiest topic in national income, measurement of national income. So friends, let me write it down for you. What we are studying is measurement of national income. Friends, what we are studying is measurement of national income. Friends, what we are studying is measurement of national income. Friends, what we are studying is measurement of national income. Cool? Yes, sir, cool. Now see everybody. If this is clear, then let me tell you something. Measurement of national income, everyone, measurement of national income can be done under three methods. Sir, will all the three methods give the same answer? Yes, they must. They have to, or else you have done some mistake. So the first method is, we call it value added method, also called product method. Value added method, or we also call it product method. Value added method or product method. So friends, there are three methods to measure national income. Each one of them we are going to discuss. So here you are given information. You are given information about production units. That is how many units are being produced. So here the focus is on production units. Okay. And you know what? All the three methods are named according to the three phases of circular flow. In the circular flow, there are three phases or three steps. You see, production phase, where goods and services are produced. Now, the people who have helped you in producing these goods, you give them their income. That is the income phase. So the second method's name is income method. And using this income, what do people do? They spend. So the third phase is called expenditure method. Hence, the third method's name is expenditure method. Hence, the third method's name is expenditure method. So the second one is income method. All these are to compute national income. Sir, will all the phases give the same answer? I told you again, yes, yes, yes. Expenditure method. It relates to consumption. Everybody, it will relate to consumption and investment. This method relates to consumption and investment. Income method, on the other hand, relates to factor earnings or factor owners. First note it down and then I shall talk further. Mr. Vivek, to reach from gross to net, you need to deduct depreciation. To reach from gross to net, you deduct depreciation. Great. All right, sir. So now, friends, we are going to discuss each method one by one. Starting right away with which method? Value added method. Starting right away with which method? Value added method. Okay. And then we will do sums as per the institute's material. But first of all, we need to understand value added method. We need to understand value added method. सबसे पहले अपने क्या पढ़ रहे हैं everyone? Value added method पढ़ रहे हैं, है ना? Value added method. Value added method और प्रोडक्ट मेथड. वैल्यू एडेड मेथड बोले या प्रोडक्ट मेथड बोले, ये आपकी इच्छा है, ये आपका मतलब है, ये आप सोचिए आपको क्या बोलना है. ठीक है ना? सबका मतलब सेम ही है. ठीक है. वैल्यू एडेड मेथड को नाउ आई विल ट्राई टू बाइफर्केट इट इनटू स्मॉल स्टेप्स. ओके. द फर्स्ट गोल, फर्स्ट स्टेप, यू कुड से सर इज टीचिंग स्टेप्स बट इन अ वेरी शॉर्ट वे. सी, number one, step number one would be classification of sectors. That's it. Oh, sir, what did you say? Step number one would be classification of sectors. So you all must know that in an economy there are three sectors that operates: primary sector, secondary sector, tertiary sector. Sir, come again. Primary sector, secondary sector, tertiary sector. Primary sector is basically the manufacturing, or I should correct myself, it is the agricultural sector, from where the manufacturing sector takes its raw material. So agriculture is basically primary sector. Number two is the manufacturing or the industrial sector, which we call as the secondary sector. And number three is the service sector: advertisement, transportation, insurance, warehousing, etc. All these are service sector. Clear? So suppose a farmer working on a field is representing primary sector. A businessman converting sugarcane to sugar is representing secondary sector. And a transporter or an insurance agent insuring the product or transporting the product is a service sector unit. So we will do the computations separately for each sector. We will be doing the computations separately for each sector. I repeat my statement. We will be doing the calculations separately for each sector. Okay. So step number one is classify the sectors. Step number one is classify the sectors. And sir, how many sectors or what kind of sectors do we have, sir? So dear students, you have primary sector, you have secondary sector, and then dear students, secondary sector, and then dear students, you have tertiary sector, and then you have tertiary sector. Primary sector, secondary sector, tertiary sector. Primary sector, secondary sector, tertiary sector. Primary sector, secondary sector, tertiary sector. So classify the sectors. Done classifying. Primary sector, if you can't remember, it is the agricultural part. Secondary sector is the industrial or the manufacturing part. And tertiary sector is nothing but the service part. Friends, I hope everybody, this much is clear, right? Come on, everyone. Yes, Ansh, they do. Yes. One of our friends asked, who are factor owners? Factor owners include all: owner of land, owner of labor, huh? owner of capital, everybody is included. Entrepreneur, everyone is included in factor owners. When I say factor owners, I refer to all the factors of production. Capital, entrepreneur, land, labor, capital, entrepreneur, land, labor. Friends, if it is clear, then should I move to step 2? Come on. Yes. Now, friends, for each sector, hello everybody. Everybody, for each sector, we compute. Sir, what do we compute? We compute everybody GVA, gross value added. For each sector, we compute GVA at MP. Hey? Sir, what is this? I will say the full form. GVA at MP means gross value added. GVA is gross value added at market price. At market price. At market price. GVA at MP is gross value added at market price. Gross value added at market price. Is that clear, everyone? Right, sir? That is clear. Absolutely clear. Okay, now let me elaborate it for you. Let me elaborate it for you. Suppose, guys, what is value added? Because continuously the name of the method is value added, value added, value added. So many times I have spoken value added. कितनी बार मैंने value added word use कर लिया. तो अब समझ लीजिए value added का क्या मतलब होता है. देखिए, I'll give, पहले मैं हिंदी में बोलूंगा और फिर मैं इंग्लिश में ट्रांसलेट कर दूंगा. सुनिए आप लोग बात को. मेरी चिप्स की कंपनी है, तो ऑफ कोर्स मेरा जो रॉ मटेरियल है, आप लोग जानते हैं मेरा रॉ मटेरियल क्या होने वाला है. सर, आलू होने वाला है, पोटैटो होने वाला है. अब आप लोग सोच के देखिए, मैं आलू को 5 रुपए का लाया. मान लीजिए एक 10 रुपए की चिप्स में मैं 5 रुपए का आलू इस्तेमाल कर रहा हूं. एक बार के लिए मान लीजिए, क्या दिक्कत है. रॉ मटेरियल है और आलू 5 रुपए का है, और जो मैं चिप्स बेच रहा हूं वो मैं बेच रहा हूं 10 रुपए के. जब मैं गुड्स एंड सर्विसेज का वैल्यू ऐड करता हूं ना, तो वैल्यू एडेड मेथड बोलता है कि मैं इस स्टेज में 5 रुपीज ऐड करूंगा. इस 10 में तो 5 ऑलरेडी इंक्लूडेड है, तो 10 में से 5 निकालिए तो एक्स्ट्रा कितना हुआ? 5. तो ये 5 और ये 5 को हम लोग जोड़ेंगे. सिंपल भाषा में इंटरमीडिएट कंजम्पशन को हटाइए और सिर्फ फाइनल वैल्यू ऑफ गुड्स लीजिए. फाइनल वैल्यू यानी कि 10 रुपए. ये 10 रुपए पर आने का 2 रास्ता है. हर स्टेज का वैल्यू एडेड. फर्स्ट स्टेज जहां पर आप आलू खरीद के लाए, मान लीजिए उसका आपने खुद ग्रो किया, एक बार के लिए मान लीजिए, तो 5 रुपया में आपने वो आलू बनाया या उगाया, आई शुड से. 5 रुपया यहां पर आपने वैल्यू ऐड किया, और जब आप 10 में बेच रहे हो, तो इस 10 में तो ये 5 भी इंक्लूडेड है, तो आपने और वैल्यू कितना ऐड किया? 5 रुपए का वैल्यू और ऐड किया. तो ये देखो, ये दोनों 5 मिलकर 10 हो जाएंगे. वैल्यू एडेड मेथड बोलता है कि डबल काउंटिंग मत करना. डबल काउंटिंग का मतलब है 5 रुपया भी जोड़ लिए और यहाँ चिप्स का 10 रुपया भी जोड़ लिए. ये तो डबल काउंटिंग हो गया ना, क्योंकि ये 5 रुपया अलग से भी आ गया और इस 10 के अंदर भी ये 5 रुपया छुपा हुआ है. इसको बोलते हैं वैल्यू एडेड. कि हर स्टेज में केवल वैल्यू एडेड को ही कंसिडर कीजिए, बाकी कुछ कंसिडर न कीजिए. ये मैंने हिंदी में बोल दिया. नाउ लेट मी ट्रांसलेट दिस टू entirely in English. Now let me translate this entirely in English. Okay, so that everybody is confirmed. Everybody is confirmed. Okay, so please pay attention. So please pay attention, everyone. Now see, everybody, what is going on is pay attention, everyone. For each sector we compute GVA at MP. For each sector we compute GVA at MP. So friends, I was explaining what is value added. So friends, value added at each stage is the value, ultimate value at that stage minus value of the previous stage. Meaning, suppose raw material potato that I had grown in my own basically farmland had costed me around 5 rupees. So what is the value added at this level? 5 rupees entirely, because there was no potato. Now I have grown this potato. So the entire 5 rupees has been added at this stage. In the second stage, when I convert this potato into chips and I sell it for 10 rupees, then this 10 rupees obviously includes 5 rupees. So from this 10, I will exclude 5. So the value added at this stage would be 5. Now both the value added, if you add, that is 5 and 5, it becomes 10. So you can take it two ways. Either you can add value at each stage, or you can only consider the final value, that is 10 rupees. Both will give you the same result. Friends, I hope value added is crystal clear to everybody. Yes or no, guys? Come on, everyone. Come on, everybody. Yes, sir. Fantastic. Friends, once this is clear, friends, once this is clear, friends, once this is clear, everybody, friends, once this is clear, now arises our third step. Now arises our third step. Sir, what do we do in this third step? Sir, what do we do in this third step? Sir, we add gross value added for each sector, because here we had computed it for each sector. So what I say is GVA at MP from primary sector. PS means primary sector, huh? But acha, just before I move on to this thing, sir, what is the formula of GVA? Because we will compute it, but how do we compute it? So friends, GVA at MP, that is gross value added at market prices, as I told, value at this stage minus value of previous stage. So it would be value of output minus value of input. Input is nothing but intermediate consumption. Input is nothing but intermediate consumption. Input is nothing but intermediate consumption, or you could say direct expenses on the goods. So, sir, how else do we compute it? Gross value added, how else do we compute it? Friends, you could say it like this. It could be like this. So it could be like value of output is sales plus closing stock minus opening stock. This is value of output. Sales plus closing stock minus opening stock, and in the end, intermediate consumption. Intermediate consumption. Intermediate consumption. Sales plus closing stock minus opening stock, that is intermediate consumption. That is intermediate consumption. Or I could say in a better way, closing stock minus opening stock is change in stock. So we could say sales plus closing stock minus opening stock is change in stock minus intermediate consumption, minus intermediate consumption, minus intermediate consumption. So whatever language you prefer would be okay. Whatever language you prefer would be okay. But you got to remember this. So sir, this is done for each sector. Please note it down, everybody. It is done for each sector. So for primary sector, alag se, secondary sector, alag se, tertiary sector, alag se. Alag means separately. For each sector, we do it separately. This is, my dear students, the second step of the game. Sir, what was first step? We have forgotten it, sir. So guys, the first step was where you were classifying the different sectors. The first step was where you were classifying the different sectors. The first step was where you were classifying the different sectors. And in the second step, what you are doing is, you are basically calculating value added for each sector. So output minus intermediate consumption, or sales plus CS minus OS minus intermediate consumption, or CS minus opening stock is also called change in stock. Sir, what comes in indirect intermediate consumption? All the direct expenses. Sir, what are direct expenses? When you make accounts, there are certain expenses like wages, raw materials that you charge to the trading account debit side. All those expenses are intermediate consumption. The raw material. So in short, I would say all the direct expenses. And if you want a hint, you could remember all the expenses in accounts on the debit side of trading account that you are using to charge. But that is what is intermediate consumption. Friends, second step I hope is clear. First step, sector, classification of sector. First step, classification of sector. Second step, computation of value added. First step, classification of sector. Second step, computation of value added or gross value added at MP for each sector. Is this much clear, guys? Yes or no, everybody? Yes. Yes. Yes, Tambeshwari, correct. Very good. Very good, very good, very good. Friends, if this is clear, then I'll move to the third step. Come on, everybody. Third step. CS long form is closing stock. OS long form is opening stock. Easy. CS is closing stock, dear. OS is opening stock. Sakshi, I hope it's clear now. Okay, good, Abhishek. Okay, Hitesh, Anuj, correct. Intermediate consumption is all the direct expenses. Intermediate consumption is all the direct expenses like raw material, wages used to manufacture the final product. Full stop. Thank you. Moving on to the third step. Moving on to the third step, everybody. Now we add the GVA of all the three stages, three sectors. Means GVA at MP of primary sector plus GVA at MP of secondary sector plus GVA at MP of tertiary sector. When you add all the GVA at MP, when you add all the GVA at MP, you get GDP at MP. Yes. So if institute asks you, is value added and domestic product different? Yes, because gross value added is computed for one sector, while GDP is computed when all the sectors GVA are clubbed together. So definitely GDP at MP and GVA at MP are different, because GVA at MP takes into account one sector at a time, while GDP at MP is the sum total of all the GVA of all the sectors. Hopefully it's clear till here. Come on, everybody. Okay. Okay. Sir, very good. Come on, everyone. Everyone online, is this clear? Come on, guys. It's clear, sir. It's clear, sir. Clear? So once you have added GVA, hello, once you have added GVA, once you have added GVA at MP for each sector, once you have added GVA at MP for each sector, you arrive at GDP at MP. But you all must remember, I had told you in the earlier class that national income is NNP at FC. So where do you want to reach? You want to compute national income. You want to compute national income, or you want to compute NNP at FC. But where do you start from? GDP at MP. Where do you start from? So we start from GDP at MP. So friends, now what I say is, this is G for gross, and this is N for net. So to reach from gross to net, what you do is you deduct depreciation. You deduct depreciation. This is domestic product. This is national product. This is domestic product. This is national product. So to reach from domestic to national, I had taught you, what do? You add NFIA. I repeat, to reach from gross to net, we do deduct depreciation. So see, I have deducted depreciation. To reach from domestic product to national product, what we do? We add NFIA. net factor income from abroad or to abroad depending on the value, and market price to factory cost or factor cost. And you all have learnt it. If you want to reach from factory price to market cost, you add NIT. So if you want to reach from market price to factory cost, then you deduct NIT. NIT is net indirect taxes. So you deduct that, and ultimately you reach your destination. NIT is, I will write it down for you, net indirect taxes. Friends, these are the 4 stages of computation of national income under the value added method. Hopefully it's clear to each one of the friends. Come on, everybody. So we totally understand till now. Everybody, please write down in the chat it's crystal clear. If it's clear till here, come on, everybody, so that I can proceed now. One more thing, just I have to mention, it's not a step, it's just a point noteworthy. I will say once everybody has confirmed their understanding of the topic. NFIA, as explained in the last class, if somebody had missed last class, they must go and do the last class. NFIA means net factor income from abroad or to abroad. That was done in the first class of national income. Today is second class of national income. Okay, great, crystal clear. Let's see. So now, my friends, I have a question to you. Suppose there is a farmer who is growing some, crops, but that farmer is not using this crop to sell it in the market, but is using for own consumption. That is for self-consumption. That is for self-consumption. Now my question is, should this value of goods that has been produced for self-consumption, now the question is, should the value of this goods that has been produced for self-consumption, should that be included in this computation of national income? The answer is yes, because goods have market value. And national income takes into consideration production of goods or services. It does not care whether you have produced it for somebody else or you are producing it for yourself. So goods for self-consumption will be included in national income, but services for self-consumption will not be included in national income. Why? Because it is very easy to know the market value of goods, but services market value cannot be easily determined. And hence, goods produced for self-consumption do form a part of national income. So write it down. It is a note. वो क्रॉप जो फार्मर ने खुद के लिए ग्रो किया है, जिसको बाजार में नहीं बेचा, क्या वो नेशनल इनकम में आएगा? जवाब है हाँ, आएगा, क्योंकि नेशनल इनकम को इस बात से मतलब नहीं है कि वो खुद कंज्यूम कर रहा है या कोई और कर रहा है। इस बात से मतलब है नया गुड्स पैदा हो रहा है कि नहीं, इकोनॉमी में हो रहा है, तो वो इंक्लूड होगा, नेशनल इनकम का पार्ट बनेगा, पक्का बनेगा। सो आई विल राइट इट डाउन एवरीवन। गुड्स प्रोड्यूस्ड फॉर सेल्फ कंजम्पशन, for self-consumption included in national income, included in national income. Included in national income. Friends, you know what? This is it about value added method. Nandha, yes, it can. Nandha is asking that, sir, can subsidies exceed tax? Yes, theoretically it is possible. It can come. Then you will have negative indirect, net indirect taxes. Doesn't matter. It can happen. So this much, I hope everybody has noted down or taken a screenshot of. Come on, everyone. Do it fatafat. Yes, Sakshi. Services for self-consumption will not be included because it's very difficult to, yes, I personally agree it is wrong. Matlab it is injustice. But the general explanation is that because services don't have a market value, or most services don't have a market value, so it's very difficult to arrive at the same. Okay, great, 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 great. So if everybody has noted this much down, then I can say Anna, and obviously we will come to sums and numericals and so on. But the idea is to primarily explain all the methods. Okay. Now, now the students, everybody, now the students, everybody who have any doubt, now the students who have any doubt, acha, who all for 5 minutes, students who want to drink water, you or take a short 5 minute break, they can. But those who want to ask doubts, please ask your doubts right away. Come on, everyone. Yes, you can ask the question, Anuj, now. For 5 minutes, I will not be speaking anything new. Yes, Nanda, I have told subsidies can exceed taxes. What is change in stock? Yes, Anuj. Anuj is asking when is GDP and NDP same? Anuj, GDP and NDP are same when there is no depreciation. See, try to understand. See, GDP, when I deduct the depreciation, then it becomes NDP, okay? But suppose if there is no depreciation only, then GDP is equal to NDP. What is the harm in that? Abhishek, change in stock is equal to closing stock minus opening stock. Our friend is asking what is change in stock? It is closing stock minus opening stock. Yes. Rent of owner house included. Rent of owner house included in national income. Imputed or estimated rent included in national income. So if you want to write it down, I will do it for you. Imputed rent of owner occupied house, of owner occupied house included in national income, definitely. Imputed means estimated. Imputed means estimated. What is output value? Output value, Vivek, is sales plus change in stock. Output is sales plus change in stock. Output is sales plus change in stock. That is sales plus closing stock minus opening stock. Okay. So I'll summarize the first four steps again. first or last, whatever you want to call it, there are only 4 steps. So see, first of all, you classify the sectors into the primary sector, secondary sector, and tertiary sector components. Then for each sector, we compute GVA at MP. How do we do that? Value of output minus value of input. That is intermediate consumption. But sir, what is value of output? Guys, it is sales plus closing stock minus opening stock. Sir, what is intermediate consumption? All the direct expenses that you incur. Now, everybody, what is closing stock minus opening stock? Change in stock. Third step, once you have computed GVA at MP for one sector, you add the GVA at MP for the other 2 sectors as well, so that you can arrive at GDP at MP. Once you arrive at GDP at MP and you want to arrive at NNP at FC, then for G to N you deduct depreciation, for DP to NP you add NFIA, and you deduct net indirect taxes to arrive at NNP at FC. You will win the game that way. Dhanush has a question, and after this question, we will move to income method because the 5 minutes will be over. Our friend Dhanush has a question. If a farmer produced goods for his own consumption, how did we know how much he produced and also consumed, sir? Dhanush, that is according to the data collected by the government from the farmers, by the state from the farmers. It is entirely on them. Okay. So yes, there may be undervaluation, there may be overvaluation. That may happen. See, that is why it is not said national income actual. It is said national income estimate. Because in any country, the population is so humongous, you can never expect to arrive at the true value of national income. It will be illogical to think of that because it's not a company, it's a country. Okay. So friends, now that is it about the questions. Now I'll move to income method. As I had told, income method, income method, income method. Come on, everyone. And please remember that you need to know, as we are primarily preparing for MCQs, you need to know only the concepts. Okay. Don't try to go so deep that, you forget the other concepts. Mere understanding is enough. Income method. Now, friends, what is income method saying, or how do we compute income under income method? Okay. All right. Step 1, everybody. Step 1, everybody. First, we classify 4 types of income. Mainly, here, 4 types of income are considered. And I will elaborate on each one of them. Please do not worry. 4 types of income, mainly speaking. Mainly speaking. So, sir, what are the 4 types of income? I would tell you. Please pay attention. See, number 1 is the income that salaried people are getting. That is called compensation of employees. What is it called? It's called compensation of employees. It's called what? It's called compensation of employees. Compensation of employees. Sir, what does this compensation mean? Means anything salary in cash, salary in cash, salary in kind. Suppose you get a house, so the value of that house, salary in kind, plus employer's contribution. Whose? Employer. There is a provident fund account, gratuity account, to which employer puts in some money for the benefit of employee. The amount contributed by employer, not by the employee. The amount contributed by the employer, not by the employee, will be included. So Compensation of employees include salary in cash, salary in kind, and employers' contribution to social security schemes. Employers' contribution to social security schemes. Okay, so compensation of employees include salary in cash, salary in kind, and employers' contribution. I repeat, employer, I have told, not employee. Correct, sir? Is this much clear, sir? Everyone? All right, then. Next. Next. Once you have completed compensation of employees, then we move on to the next one. It is rent. If you are owner of a flat, you get rent, or a land, you get rent. Royalty. So suppose you have some patent or copyright in your name. Suppose you are having some patent or copyright in your name, then you get royalty, yes or no? So rent, royalty. If you have given loan to somebody because you have a lot of money, you give loan to somebody. You know, nowadays, if you see Shark Tank, the sharks tell that, okay, we are going to give you this much debt for this much interest. So that is interest, rent, royalty, interest. And another thing is, which is called profit, which is called profit. Profit made by who? Profit made by the companies. So profit is equals to three things. See, the total profit of the company is considering three things. Number one, the tax component. That it is that part of profit that we will be giving to the government. Corporate taxes plus a part of the profit is retained. So that is called retained earnings or reserves. Because sometimes what may happen, the institute may not give you profit. It might give you three figures. So you have to add them up to arrive at profit. Corporate tax, okay? There is corporate tax, okay? There is retained earnings, okay? So these two done. And there is another one. Corporate tax done, retained earnings done. And some part of the profit is given out as dividend. So, sir, why you have written this? I have written this because sometimes profit may be missing. So you will have to add this three to arrive at profit. Okay, sir, we have understood this three. Sir, what is the fourth one? Friends, the fourth one is, see, sometimes what happens is, sometimes it is very clear that a person has income from one source only. That is compensation of employees. Very good. The person has income from rent, royalty, interest. Very easy to identify. Profit. But now just imagine something. Suppose somebody is a chartered accountant, okay? They are having a huge house, let's say with 4 to 5 rooms. Okay, they have 4 spare rooms. So what they do is, 4 spare rooms or extra rooms they are having. What they do is, in one room they set up their office, okay, where they do their practice. In the second room, the person has given it on rent for somebody else to stay. Okay. The third room, the first room was the office of the chartered accountant where the CA work is done. The third room may be for some other consultancy purposes. And the fourth room, suppose the chartered accountant likes teaching small kids, 5 or 6, 7 or 8, class 8 or 9 students, so class 9 or 10 students. So maybe in the fourth room, he or she is getting some fees from those students because he is helping them out. Now it is a matter of big confusion because the same person is having 4 to 5 different types of income. In such a scenario, we write them income of such people where we are not able to classify or bifurcate. We classify them under the fourth head, which is called mixed income of self-employed. It is the income of people who have income from multiple sources, and it becomes very difficult to segregate. So we add them up together. Mixed income of self-employed. These are the four components of, income, mainly four types of income. Come on, friends, is this clear? Okay, sir, it's clear. So now, having said that, so friends, you have understood there are four types of income which we are discussing here. Compensation of employees, rent, royalty, interest. Third one is profit. And the fourth one is MICE, mixed income of self-employed. Mixed income of self-employed. Fourth one is MICE, mixed income of self-employed. Right? So one of our friends has asked that somebody has, sir, sold the property and has made profit. Where will it come? You will have to identify whether the person is in the business of selling properties. If it is the business, then the profit from sale of property would be under this category. But suppose it is not the business of the person to sell property, it's just that one or two cases where he sold his own home or house, he or her, and made a profit, then it would be under MICE, mixed income of self-employed. Great, sir. Now, friends, I will tell you an important term, very important from the MCQ point of view. What is that, sir? Please remember that the sum of these two is called operating surplus. Sometimes in exam, they will give operating surplus. So remember, the sum of these two is operating surplus. Sir, which two, sir? All these two. Rent, royalty, interest, profit. Rent, royalty, interest, profit. Rent, royalty, interest, profit. Rent, royalty, interest, profit. So friends, if they ask you, if they give you operating surplus, then you may wonder, what is it? It's rent, royalty, interest, profit. It's rent, royalty, interest, profit, all clubbed together, all taken together. Okay, sir, we understood this step. Now, everyone, having said that, इतना अगर समझ में आ गया है, हम लोग रेंट, रॉयल्टी, इंटरेस्ट, प्रॉफिट को जोड़ेंगे तो ऑपरेटिंग सरप्लस आएगा. यदि आपको इतना समझ आ गया है, तो अब हम लोग सेकंड स्टेप में आते हैं ना. Now we come to the second step, na, ideally. Now in this second step, dear students, in this second step, you have this four type of income. That's cool. Now, in this second step, what happens is we add all of them. Means we add compensation of employees. We add operating surplus, OS. OS is operating surplus, which includes rent, royalty, interest, profit, and we add MICE, mixed income of self-employed. So see, all the four I have considered. See, COE is compensation of employees, operating surplus is rent, royalty, interest, profit, and MICE is mixed income of self-employed. Friends, when you add them up, hello friends, when you add them up, you reach a figure. Everybody, you reach a figure. What is it called? NDP at FC. Remember, the sum total of all the incomes would give you NDP at FC. Would give you NDP at FC. Acha, contribution to SSS, social security schemes. Social security schemes like provident fund, gratuity, where the employer has put money for the benefit of employee. SSS means social security scheme. Okay, but sir, where do we want to reach? Come on, everybody, write down in the chat. What do we have to compute? What do we have to compute? Not NDP at FC. The goal is not NDP at FC. What do we have to compute? Sir, we are computing national income. And guess what? We had discussed national income is NNP at FC. The default measure is NNP at FC. That is national income, right? Always the end goal is to compute national income, and national income is NNP at FC. So how do we reach there, sir? Right. KS, correct answer. NDP at FC plus we add NFIA. Therefore, because N is same as N, FC is same as FC. So you all got to remember that to domestic product, when you add NFIA, you reach national product. These are the three steps underlying the income method, everyone. Note them down immediately, everybody. Is that done, everyone? Yes, sir, it is done. It is done, sir. So we have understood the three things. Number one is we have understood the step one, wherein we first of all classified the four different types of incomes under the heading compensation of employees, then rent, royalty, interest, then profit, and eventually MICE, mixed income of self-employed. We added them up to reach NDP at FC, to which we added NFIA to reach NNP at FC. Friends, guess what? Now I come on to the last method, which is the expenditure method under the three different methods. And then, of course, we will take up some questions and we'll discuss them. Okay. So we are talking about expenditure method now. We are talking about expenditure method now. Expenditure method. Then, of course, we will compute. Don't worry. Expenditure method tells us to identify the four different sectors that spend money. Sir, there are four sectors. Yes, there are four sectors. Sir, what four sectors are there? We don't know. I'll tell you. Number one is the household sector. Household sector. Household sector. Four different sectors under expenditure method. Number one is the household sector. Then there is the business sector, most commonly referred to as firms. Friends, there is the government that you have, because government is also incurring expenditure. Only households don't incur expenditure. Firms also incur expenditure. Government also incurs expenditure. Also rest of the world. Means exports and imports. Rest of the world. Barabar? Yes, sir, clear. Now, friends, households incur two types of expenditure. Sir, what two types of expenditure? I am also household. You people are also household. You all tell me, let's say the shirt I am wearing. Huh? The rice that you ate today, or whatever you ate today, all this is consumption expenditure. So households incur consumption expenditure. Households incur consumption expenditure. But to the contrary, don't the households incur investment expenditure? Yes, they do. Sir, how can we, surely rely on that? I'll give you an example. Now. Don't the households own houses? Obviously. Don't they have jewelry? Don't they have gold? Yes, sir, they certainly do. So, friends, that would come under the purview of investment expenditure. Investment expenditure. Okay. Now, sir, let's talk about firms. Sir, what kind of expenditure do the firms do? Of course, investment expenditure. Firms, almost all the expenditure, be it on raw materials, be it on machinery, etc., etc., all this is classified as investment expenditure only. So everybody, that is conducted under the heading investment expenditure. That is covered under the heading investment expenditure. Then, dear students, there is an expenditure done by the government. Then, dear students, there is an expenditure done by the government. So, what is this expenditure known as? Everybody, then this expenditure is known as government expenditure. Government expenditure. But wait, actually, government does two types of expenditure. Government also spends on consumption. Government also, everyone spends on consumption. Sir, how come? Like education, healthcare, etc., military. So, government also spends on consumption, but government also builds bridges. So that portion of the government expenditure is investment. Yes or no? Yes, sir. Just like the households. And in rest of the world, you have exports minus imports. X is exports, M is imports. So net exports. Because to produce goods, there is some cost incurred. Net exports means you are exporting goods. Array to export goods, you need to produce them first. That cost is being referred here. Net exports. So friends, this is the first step where we identify the different sectors who incur expenditure. Now we at club the expenditure of same nature together. Expenditure nature. Sir, what do you mean? Expenditure nature means, so you will see that there is household consumption expenditure and then there is government consumption expenditure. Yes or no? So we can club it under the head consumption expenditure. We can club it under the head consumption expenditure. This consumption expenditure will include both HCE, household consumption expenditure, and GCE, government consumption expenditure. Yes or no? Expenditure nature number one. But you see, investments is occurring at three levels. Friends, investments is occurring at three levels. Households are investing, firms are investing, government is investing. This kind of investment is known as gross domestic capital formation. When you add all the investment together, that is called gross domestic capital formation. That is called gross domestic capital formation. So what does it include, sir? I will write down gross domestic capital formation. Gross domestic capital formation. What does it include, sir? Gross domestic capital formation includes everybody. Investment by households. Okay. Investment by firms. In IH means investment by households. IF means investment by firms. And IG means investment by the government. So expenditures of same nature we are clubbing together. So if you see, we have assigned this three a category as well. Yes or no? So dear students, now what are we left with? Net exports? Yes or no? So we add them. And guess what? When you have classified expenditure natures together and added them up together, it becomes GDP at MP. It becomes GDP at MP. So you remember when all the value added were added together in the first method, it became GDP at MP. In the second method, when all the incomes were added together, it became NDP at FC. In the third stage, in the third method, I would say, where all the expenditures are added together, it again becomes GDP at MP. Friends, is this clear till here? Yes or no? Come on, everybody. Okay, Anuj. In the profit formula, We have done corporate taxes, retained matlab savings of the company, retained earnings and dividend. Okay. So please do this. Is this clear expenditure method till here where we have arrived at GDP at MP? Is this clear, guys? Come on, everyone. Okay. So expenditure nature, what we have done is all the consumption nature, we are clubbing together, like households consumption expenditure. Okay. Government's consumption expenditure, we have clubbed them together. Okay. All the investments we have clubbed together, like households investment, firms investment, government's investment, we have clubbed them together. And finally, we club net exports together with all of the rest. Okay, now, friends, guess what? What was the ultimate goal? To reach NNP at FC, national income. I repeat, national income, because of course we are doing methods of computing national income. So how come we forget it? And national income is what you all know it, NNP at FC. So that is what is national income. Everybody, that is what is national income. So what you do is in GDP at sorry, yes, correct. In GDP at MP, much like value added method, to reach from gross to net, you deduct depreciation. To reach from domestic product to national product, you add NFIA. And to reach from market price to factory cost, you deduct net indirect taxes, which is NIT. And you know what? The steps will be completely over. The steps will be completely over. Yes. Is this done till here, everyone? Okay. So if it's clear, I'm planning on doing a sum, but if everyone confirms that they're okay so far. And you know what? Examination question will never tell you which method it is from on the basis of data given. So let's say if it gives value of output, intermediate consumption, something of this sort, naturally it means the question has come from value added method. If the question is giving us data like operating surplus, rent, royalty, interest, compensation of employees, employers contribution, naturally the question has come from income method. But if they are telling us about government expenditure, etc., it's from expenditure method. So the kind of data that we get is going to determine what method has been asked in the examination. What method has been asked in the examination. It will be, clear then only. Sir, we are clear so far. Okay. So everybody, if it's clear so far, no issues, let's proceed. Okay. Now let's go to the sum, everyone. Please calculate operating surplus. Calculate operating surplus with the help of following data. Calculate with the help of following data. So let's practice the question now with the help of following data. Okay. So this is what has been asked to us. All right. So now everyone answer this. The data that is given to us is sales 4,000. Of course, the data is in rupees crores. Okay. thousands of crores. So don't worry about that. Okay. Compensation of employees. Compensation of employees. Compensation of employees has been given as 800 crores. Okay. 800 crores. Intermediate consumption is 600. Intermediate consumption. Intermediate consumption is 600 crores. Rent is 400 crores. Interest is 300 crores. Net indirect tax is 500 crores. Net indirect tax is 500 crores. Consumption of fixed capital, by which I mean depreciation, by which I mean depreciation is, 200 crores, 200 crores, and mixed income is 400 crores. I am waiting. I am giving you all the chance to try it out, and then I will be having the discussion. Mixed income 400 crores. Now, as per them, operating surplus is what? They have given us four options. They have given us four options. A, 1400 crores. B, 1600 crores. C, 1500 crores. D, 1800 crores. So these are the options. Please start solving, and then I will discuss. But I'll wait for 2 to 3 minutes for you all to do it. Come on, everybody. Come on, everyone, try it out. Come on, everyone. So, sir, you can see, everybody, that I had taught you in the output method that in output method, when we do sales minus intermediate consumption, we get GVA at MP. This sum is a mix of two methods. Sir, how come? I'll tell you how come. See, please pay attention. Sales. Everyone, please pay attention. Okay. Everyone pay attention, please. Okay. I'll do it again. See, you all know that sales for each sector minus intermediate consumption, sales minus intermediate consumption for each sector is how much? GVA at MP for that sector. Yes or no? So now pay attention. Sales is 4,000 and intermediate consumption is 600. So pay attention, please. Please pay attention. 4,000 minus 600 is GVA at MP, right? Or I could say that GVA at MP is 3,400 crores. But guys, wait. But friends, wait and look something. Sir, what is it? Are we given data about multiple sectors here? No, they have only told about one sector. They haven't said primary, secondary, or tertiary. So we will assume that this GV at MP is nothing but GDP at MP. What did I say in the value added method? That you have to add GV at MP for each sector to arrive at GDP at MP. But for that, multiple sector data has to be given to us. In this question, is multiple sector data given? No. So what we got to do is we just assume it to be GDP at MP. Why? But sir, this is GDP at MP. Now wait. Now wait. Now wait. I am planning to reach NDP at FC. Sir, why are you planning to reach NDP at FC? I will tell that to you later on. I will tell that to you later on. You just focus here now. How do I reach NDP at FC? Sir, for gross to net, you have to deduct depreciation. For domestic product to domestic product, you don't have to do anything. For market price to factory cost, you have to deduct net indirect taxes. You have to deduct net indirect taxes. Yes or no? Yes, sir. So now GDP at MP is 3,400 crores minus depreciation, as I could see, is 200. I told you consumption of capital, consumption of fixed capital or capital consumption is depreciation. I told in the last class, consumption of capital is nothing but depreciation. So 200 is depreciation. How much is net indirect taxes? 500 crores. So it gives us NDP at FC. Array, but sir, have you forgotten that you have to compute compensation of employees? No, I haven't forgotten that. So 34 minus 2 is 32. 32 minus 5 is 2700. Minus 5 is 2700. But sir, why are you doing this? I'll answer that. Now look, we have interest data. I mean income data. In income, you all know, if we add all the incomes, hello, your question would be, but why has sir found out NDP at FC? Please focus. I had taught you that under income data, if you add all the income, you get NDP at FC. The other information that was given to us was about income. See, compensation of employees, income data, rent, interest, income data, mixed income, interest data. Yes or no? So now pay attention. We know, please focus. Compensation of employees, please pay attention. Compensation of employees plus rent, royalty, interest, profit, right? Compensation of employees plus rent, royalty, interest, profit plus mixed income. Plus mixed income would give you what? NDP at FC, yes or no? Yes or no? And guess what? I will remove all of them. Rent, royalty, interest, and profit together is called operating surplus. Is together called operating surplus. So let's remove this. Let's remove it from here for the time being. And instead, let's put operating surplus here. Let's put operating surplus here. So now everyone, compensation of employees is 800. I need operating surplus, so I will not put anything. Compensation of employees I have put. Operating surplus, why will I put the other values? Because they are included under operating surplus only. And mixed income has been given to us as how much? 400. I will add that only. Will be equal to NDP at FC, yes or no? And guess what? I used the value added method earlier to arrive at NDP at FC. Which is how much? 2700. Yes or no? So guess what, guys? 1200 plus operating surplus is 2700. So operating surplus is 2700 minus 1200, 1500. This is the answer. So answer is C. Everybody, the answer is C. Come on, everybody online. Is that clear? Yes or no? So it is like mixing two different concepts together. It is like mixing two different concepts together. First, I used the which method? Value added method. Which method? Value added method. Why? To arrive at NDP at FC. Now I added all the incomes up to arrive at NDP at FC, within which I knew the value of compensation of employees and mixed income of self-employed. What I only had to find out was operating surplus, which I just substituted the values and got the answer for. Come on, everybody. Is that clear? Come on, guys. Is this good? Yes, sir. This is clear. Now, sir. Now, sir. Another question that we are taking up. Acha, one more thing you remember. In this method, you remember in the expenditure method, I told that the sum total of this is gross domestic capital formation, all the investment expenditure, yes or no? Please remember that in exam, they may give net domestic capital formation. Please pay attention what I'm saying. Here I told what? That if there is gross domestic capital formation, then what do you get here? GDP at MP. What do you get here? GDP at MP. But I am warning you about something. I am warning you about something. Sir, what is it? I'm warning you about something. Sir, what is it? Tell us. The warning is if instead of gross domestic capital formation, they give you net domestic capital formation, then remember you will get NDP at MP, not GDP at MP. Then don't tell me, sir, we did it wrong. Here it is gross, so here it is gross. Had here been net, here would have been net. So let me write it down for you. Na? Note. For expenditure method, note for expenditure method, note for expenditure method, remember, for expenditure method, consumption expenditure plus if you get net domestic capital formation, net domestic capital formation plus net exports. Net exports is okay, no problem whatsoever. Then because of this net, you will not get GDP at MP, but you will get NDP at MP. Don't make this mistake, please. Is this clear, everyone, so far? Okay, great. I repeat, what I told was, you remember, I have made you write in the notes in the expenditure method that there is gross domestic capital formation, which is all the investments taken together. If in the exam they give you gross domestic capital formation, then this formula is okay. You will add them and you will reach GDP at MP. But if institute, instead of gross domestic capital formation, gives you net domestic capital formation, then remember you will get NDP at MP, not GDP at MP. Just remember this. Mr. Motiani, you just have to remember this. You can say that you have to remember this. Learn it, bus. Okay. Now, another MCQ, let me ask you. Rent plus royalty plus interest plus dash equals to is equals to operating surplus plus dash equals to operating surplus. Your options are A, depreciation, B, profit, C, mixed income of self-employed, or D, net indirect tax? Come on, everybody, answer this MCQ then. Because Nanda, rent, royalty, interest, you have added rent and interest, but in the examination question, royalty and profit is not given. Everyone, one of my students is asking, they are asking that, sir, why you have not added rent and interest simply and given 700 as the answer? Because the figure of royalty and profit we don't know. That is hidden. So we had to do it like this, and the answer would be 1500. Now come back to this question. So very good. I can see people answering this: rent, royalty, interest, and profit. Absolutely correct answer, friends. Again, okay. Now, question three is, question three is, profit is equals to corporate taxes, corporate taxes plus retained earnings plus dash. Option A, depreciation. Option B, losses. Option C, dividend. Option D, none. Wow. I can brilliantly see that some students have answered it already correctly. Correct answer is dividend. I have done it under income method. Okay. Next question is, the next question is, GVA at MP of primary sector plus GVA at MP of secondary sector plus GVA at MP of tertiary sector is equals to what? Options are A, NDP at MP, B, NNP at MP, C, GNP at MP, D, GDP at MP. Come on, everybody. Let's see who answers this. Absolutely. Wow. So, friends, the answer is GDP at MP. In the first step itself, in the first method itself, it was made very clear. See, in the first method only I had taught you this, not even the second one. Correct? Right, sir. The fifth one is goods produced for self-consumption is not included in national income. Your options are A, true, B, false, C, both, D, none. Goods produced for self-consumption is not included in national income. Is this statement true or false? Correct answer. False. Because it is indeed included. Okay. At the national level, which body compiles national income data? Which body compiles national income data? A. Reserve Bank of India. B. Ministry of Finance. C. Supreme Court. D. Central Statistics Organization. Which body compiles national income data? Okay, correct. Central Statistic Organization. Central Statistics Organization. Central Statistics Organization. Correct answer. Let's move on to the seventh one. If consumption expenditure is rupees 400 crores, gross domestic capital formation is rupees 200 crores, net exports in negative, in bracket means negative, net exports is rupees 100 crores, depreciation is rupees 50 crores. Find GNP at MP. Find GNP at MP. Your options are A, 600 crores. B, your options are 550 crores. C, your option is, everyone please pay attention, your option is 450 crores. And D, your option is 500 crores. Which one is it, guys? Come on, guess it. Let's see who answers this one correctly. Absolutely. So see, let's solve. Or let me make a small change in the question. Just a second, a small change in the question. Compute this. NDP at MP. Forget. I'll give you another minute. Don't worry. If you have done the previous one, no problem. You do this. So see, the solution for NDP at MP. First, you know, GDP at MP is the sum total of all the expenditures taken together. So you will add 400, plus you will add 200, plus you will add net exports, which is in negative sign. Yes or no? Yes or no? Right, sir. This is GDP at MP, mind you, because all the expenditures taken together give GDP at MP. Now this is 600 minus 100, 500. Now earlier I had asked you GNP at MP. Arey Baba, if NFIA is 0, the previous question that I had given, है ना? So if NFIA is 0, then GNP at MP will also be 500 crores. This is related to the first question which I had written here, na, which I had corrected There it is. And second thing is, if I ask you NDP at MP, friends, it would be this GDP at MP minus depreciation, which is how much? 50. So that would be 450. So if they ask NDP at MP, it is 450. And if NFIA is not given, you assume it to be zero, of course. So with this, friends, another important aspects we have covered of national income. In our upcoming class, we are going to deal with topics like personal income, personal disposable income, and similar other areas and some more MCQs. That's it for the day. Goodbye, everyone. Thank you very much. Bye bye.